Well, even the biggest mining companies have a few bumps and bruises from the debt problems plaguing Europe. BHP Billiton reported a fall in its half-yearly profit for the first time since 2009 as the resources boom eased off. But the profits are still huge. In a moment, we talk to BHP Billiton boss Marius Kloppers. But first, this report from Philip Lasker.
BHP Billiton's making a pile of money, but it's not good enough.
It's a very strong result, but it's been delivered into a market that's got very high expectations.
Hence the fall in BHP's share price, despite a $9.2 billion half-year bottom line and an increased interim dividend. It was the first half-yearly fall in 2 years, a symptom of the weaker global environment and China's slowing economy, which hit some commodity prices.
But then you also had things like some strikes, some very poor weather, and when you have those sorts of things, that increases your unit cost of production.
A third of BHP's revenue came from iron ore, which along with the petroleum and coking coal divisions did very well. Base metals suffered from falling metals prices. The Escondida copper mine in Chile was hit by strike action. And BHP Chief Executive Marius Kloppers was cautious about the future.
Unfortunately, we see no simple solution to the structural imbalances and high level of sovereign indebtedness in the OECD countries.
So BHP is sticking to its massive $75 billion spending plan on projects in the next 5 years, aimed at expanding key areas like iron ore and energy. But it means less for shareholders in the short term.
The thing that possibly people were hoping for was the announcement of another buyback, and we haven't seen that.
Yeah, I can understand the disappointment, but on the other hand, BHP does have long-term projects in place that are going to sort of set the platform for the company for the next 50 years.
Some shareholders just can't wait.